If your condo association faces a major loss, a fire that damages the common areas, a liability lawsuit, storm damage to the building, they may assess each unit owner to help cover the costs. These assessments can be thousands, even tens of thousands of dollars. Loss assessment coverage on your HO6 policy helps pay your share. In most Massachusetts, condo owners don't have enough or do not have it at all. I'm Carlos Vargas from Vargas & Vargas Insurance, and today I'm going to explain why loss assessment coverage is essential for condo owners in Massachusetts. Loss assessment coverage protects you when your condo association levies a special assessment to cover property damage or liability claims. Here's how it works. The building suffers a covered loss. Let's say a fire damages the roof and common areas. The repair cost is $300,000. The master policy has a $25,000 deductible, and it pays $275,000. The association needs to come up with the $25,000 for the deductible. They may assess each unit owner. In a 50-unit building, that's a $500 per unit assessment. In a 10-unit building, that's a $2,500 per unit assessment. Or if your condo is in a triple-decker that has been converted to 3 condos, the 3-unit will end up dividing the $25,000 that ends up being a little more than $8,000 per unit. Your loss assessment coverage pays your share of that assessment, up to your policy limit. But assessments aren't just for deductibles. If the damage exceeds the condo's master policy, the association assesses for the shortfall. If there's a liability claim against the association that exceeds the coverage, the same thing, each unit owner gets assessed. Or if the condo master policy excludes covered losses, like flood or earthquake, the entire repair cost might be assessed to the unit owners. Let me give you a real-world scenario that leads to assessments. A nor'easter damages the roof of your condo. Water intrusion damages the interior walls and common areas. The condo master policy covers most of it, but there is a $10,000 deductible. The board assesses each unit owner a portion of the deductible. If it's a 4-unit building, each one gets assessed $2,500. If it's a 10-unit building, each one gets assessed $1,000. The triple-decker conversion in Dorchester or Somerville has a fire in the basement. The building is older and the master policy limit was not kept up with construction costs. The repair bill is $400,000, but the policy limit is only $300,000. The 3 unit owners are each assessed about $33,000 each. An older building in the South End or East Boston has a liability claim. Someone slips on the ice or in the parking areas, ensues. The settlement is $350,000, but the condo master policy only pays up to $300,000. The association assesses each unit owner for $50,000. Cambridge or South Boston condo building experienced a significant water damage from burst pipes during a cold snap. Multiple units are affected, the condo master pays, but the deductible is $50,000. In a 20-unit building, that is $2,500 per unit. These scenarios happen regularly in Massachusetts. Our older building stock and harsh winters and high construction costs create conditions where assessments are more likely. Most standard HO6 policies include a small amount of loss assessment coverage, often $1,000 to $5,000. This is nowhere near enough for many scenarios. We recommend at least $50,000 of loss assessment coverage for most Massachusetts condo owners. And if you're in a smaller building, an older building, a building with lower master policy limits, consider $50,000 or even more if available. Here is how to think about it. What is the condo master policy deductible? Divide that by the number of units. That is your minimum exposure just for deductible assessments. Then consider what it would cost if a major loss exceeds the condo master policy. In a 4-unit converted building with a $20,000 condo master policy deductible, your share of that deductible is $5,000. If the master policy limit is inadequate, and many are, your exposure could be much, much higher. Higher loss assessment limits are inexpensive to add. Going from $5,000 to $50,000 is usually between $25 and $40 per year. This is nothing compared to the potential assessment exposure. Loss assessment coverage has some limitations to understand. It only covers assessment resulting from covered losses, fire, windstorm, liability, and similar losses. If the association assesses for routine maintenance or capital improvements, your loss assessment coverage will not pay. It does not cover assessments for flood or earthquake damage, unless you have specific coverage for these perils. If your building floods and the master policy has no flood coverage, the entire repair assessment would not be covered by the standard loss assessment coverage. There may be pre-occurrence limits. Check whether your coverage applies per assessment or per policy period, and there is usually a requirement that the covered loss be a covered peril. If the condo policy excludes the loss and assesses the unit owners, your loss assessment coverage may not apply. Understanding your condo master policy is essential to knowing your loss assessment exposure. Find your master policy certificate and find out what the deductible is. Higher deductibles mean higher potential assessments. Find out the master policy limits for your building's coverage and liability. Are they adequate for a major loss, or is there likely to be a shortfall? Find out what perils are excluded. Does the condo master policy cover flood, earthquake? If not, and those events occur, the entire loss could be assessed. And if your association has inadequate policy limits or high deductibles, your assessment exposure is greater. Advocate with your board of trustees for better coverage. And in the meantime, increase your own loss assessment limits. Your loss assessment coverage is one of the most important and most overlooked coverages on condo owners in Massachusetts. Assessments after major losses can be substantial, especially in smaller buildings and older properties. Check your current loss assessment limits. If you have a standard 1 or 5,000, that's not enough. Consider increasing it to 25 or at least $50,000. The cost is minimal and the protection is significant. In the next video, I'm going to tackle water damage in Massachusetts condos, one of the most common and confusing claim scenarios. And who pays for what? I will link that video here. And if you'd like us to review your loss assessment coverage and your overall condo protection, reach out to our team for a free coverage review. The link is in the description of this video. I'm Carlos Vargas from Vargas & Vargas Insurance. Remember to stay informed and stay properly protected. I thank you for watching.